Hello and welcome to another video. I was originally planning to make this video about divergence between price and an indicator, but I changed my mind. Now don't worry, that video is still coming, and probably next actually, but instead of that one today, I'm going to do another all concepts in one video style breakdown to show you how I use all the concepts we've learnt so far to execute real trades. I'm going to cover a whole lot of stuff in this video, including walking you through step by step how I formed and executed 3 trades on Tuesday the 20th of May. Now, having someone talk you through real trades, breaking down why the trade was taken, what concepts were used, showing you how to apply them, and showing you everything step by step with real market examples, I honestly think that that's where the real learning happens and the real value lies. Theory is great, but once you have that, you need to know how to execute. There's a disconnect sometimes between understanding a concept and actually being able to apply it. So that's what I'm going to show you how to do in detail in this video. Alright, so spoiler alert, there's going to be a loss, a win, and a, it's kind of hard to explain, so you'll have to watch the rest of the video to find out. But there's going to be a ton of value in this video, and I'll also show you some of the actual realities of trading relating to psychology, decision making, fitting it around your lifestyle, and all sorts of other stuff. So it's going to be a long one, and if you want to squeeze all of the value out of it, you need to watch the whole thing through to the end, and then probably watch it again, and open up your chart and take a look for these things yourself, because there is no 15-minute trading model video that's going to make you a pro trader. You need to put the time and the work in, and if you want a quick fix, you should probably just click away from this channel right now. But if you have the patience, professionalism, discipline and drive to do what it takes to make this work, grab a drink, a notepad, and let's get started. Now, before we get into the trades in detail, I just wanted to show you something interesting that I found on the weekly chart. Now, I don't use the weekly chart very often, and I don't find any need to because I trade generally the smaller time frames, and this is just too far away from that for me to find really useful. But I wanted to show you this example of market structure because this is something that could catch you out in any time frame with market structure. And so I wanted to highlight it because it was a great example. All right, so the main thing I want you to take away from this is that we're in an uptrend on the weekly chart. We can clearly see that from both the external structure, the last bit of which I've drawn on here. So we've got a breaker structure here, right, when we close above there, and that becomes then a protected low or a strong low. Okay. Once we break this with a body close, the lowest point between is the strong structure. All right, so we can see clearly that, you know, from all the way down here coming up, we only have really one bearish change in the state of delivery and another one there. And what are those bearish examples doing? Well, they're basically just facilitating a pullback on the weekly chart, right? You can see that price is coming up and then pulls back and then coming up, pulls back, and so on. So we can see that most of our structure, our internal weekly structure, is bullish, right? Because we have all these bullish change in state deliveries. But anyway, we can see then that it switches somewhat to come back down. Now, are we saying this is a pullback or are we saying this is a trend change? Well, if we think about our market structure, it shouldn't be a trend change until we've broken through this strong structure here, okay? And this is actually a daily level that I've drawn here, but it's also the weekly level, right? So it's the same thing, basically. Now, what I want you to think about here is we appear to have broken structure here, right? Zoom in a little bit more for you. See, here's the strong structure, here's the break. But are we saying then that, oh, it's broken structure, so now we're going bearish? No. Now I'm going to tell you why. What I want you to think about is that first off, we have a change in the state of delivery down here that is actually not being touched. Now, it's not a requirement, of course, for a change in the state of delivery to be touched, but we know if you've been watching and following along with the rest of my videos, that they often are, and they often provide support, okay? Now, what we can also see is there's a fair value gap down here, which price has pushed down into. So looking at those two areas of liquidity there, we could say that, okay, well, it sort of makes sense that price might want to go and revisit them before a further push up because it needs the fuel, right? From the liquidity videos that I've just done, it needs the fuel to push up. So there's a reason for it to go and take those. But we still got this body close, right? That's a problem, isn't it? Well, just think about the candles for a second, because you might not have noticed this, but let's just think about them. You know, a candle needs to, or generally will close, for example here, it will close and then the next candle opens on the same level, right? That's usually what happens. That's usually what we expect. But sometimes there's some sort of disconnect between that, like here. Okay, so we've got a close and then it's actually opened higher, it's pushed up a little bit and then it's pushed down. You can see there that you've got that mismatch between the two levels, the opening price, the closing price and the opening price of the next candle. And you've got the same thing here. This time you've got a gap. So candles aren't always perfect. So what do we notice about these candles that do push lower? Well, look at this. I've drawn a line out so you can see it. When this candle closes, we're supposed to open the next candle here. And if we were bullish, then we'd probably push up. But what's actually happened is we've gapped down all the way down to here. And that's where we've opened this candle. Now, on the open, we've pushed down into the fair value gap. That was a weekly fair value gap. We pushed down into that, almost perfectly tapped the 50%, and then we've pushed straight up back into this volume imbalance here. You can see in the red there. See between these two candles is the volume imbalance. Zoom in a little bit more for you. And then we pushed up into that. We got a bit of a push back down and we closed here. So if these candles were normal, let's say, this candle, this bullish candle, should have opened here on this black line. But what's happened is it's gapped down and opened there. So we seem to have some sort of body going below the strong structure. But it isn't a body close, right? This is a body open. So when we get that body open, we push up and the actual close is here. So we never actually closed below this level. Okay, we opened there and then we pushed up. So are we then saying that this is a break of structure because we closed below here? No, we didn't. We didn't close there, right? So in that case, you should be considering, based on what these candles are doing, and analysing them very, very carefully in this way, that actually we can see there's no body close. So we're not bearish. Okay, and as you can see, that would have been correct. And we start making change of state of deliveries upwards. That was just a quick bit of market structure that I wanted you to see, because when I was doing this video and I noticed this, I noticed it on the daily chart as well. And I wanted to show you that. Anyway, let's move on to the daily chart now. So here we can see on the daily chart, we have the NASDAQ on the left and the S&P on the right. And you can see they look very similar in many ways at first glance. So we have this volume imbalance on both. We have this daily fair value gap on both. And then what we can see is that we do use this fair value gap eventually to push higher. But this one has been untouched for now. So this one's left alone. And then we come up. And something I wanted to point out here is, if you can see this move here, what do we have there? That's microstructure, right? If we're on the daily chart, the microstructure on the daily chart is showing us something here. And what it's showing us is that basically price has pushed up, come back down, opened here, pushed down, and then gone up. So if we think about it, I mean, part of that move is just a pullback to go higher, right? If we see this on the daily chart, we can sort of recognize that something's happened on another time frame, right? So let me draw that out so we can see it. Okay. So let's do it on here. So there is our zone. I'll just change the color a little bit so we can see. Maybe I'll just change it to red, call it a volume imbalance, but it's not, it's just a pullback, right? I'll just use that so we can see where it was. Now if we go to the 2-hour chart, and down here we can see where that volume, or sorry, the pullback was. Okay, so between those wicks of those two candles is basically this and the move up, okay, on the 2-hour chart. So these are this would be the daily wick, and then there's, it goes down to the other daily wick. So here we can see, interesting in this area, is that once we get this zone created, and then we push up higher than it, we come back down and revisit it. At the same time as we're revisiting that zone, we also revisit the 2-hour fair value gap that was created here, and then we push higher. We push up, we come back down, and then we create, as you can see here, the red line, an SMT inside the 2-hour fair value gap, and inside, in fact, the daily fair value gap there. So, I mean, on the 2-hour chart, we could take a trade from, let's say here, change in state delivery, whatever, going up, we probably want to drop to a lower time frame. But you can see that that pullback zone, the red zone here, on the 2-hour chart, a proper pullback. But on the daily chart, it's just 2 wicks. You might not notice it on the daily, but I want you to start getting to read other charts on, smaller chart timeframes on higher chart timeframes. What we can also see here, if we just quickly have a look, is that we get this zone here. Oops, sorry. We get this zone here, right, down to go up. We come out of it, we tap back into it right on the 50%, and then we go up. And if we move this zone as we did before, then we basically get the same sort of thing happening here, right? We come back down into the zone and then we go off with a SMT with a 2-hour FVG. Okay, so I mean, if you waited for all this to happen and just disregard the SMT for now, but if we waited and we saw a change in the state of delivery here, right, and pushed up high, we could see, okay, what happens when we get a revisit of that change in state of delivery on the 2-hour? Oh, look, we get an SMT, a revisit of the 2-hour after being supported higher by all this zone and all this fair value gap. And then we could say, okay, well, once we get a revisit that change in state of delivery, we could enter there, right? Or we could enter on here in this change in state delivery. Either way, on this chart, you could have got a trade there. Okay, as I've drawn out, that's a 3-to-1, I think. Yep, it would have been slightly more, but whatever. We could also potentially go to another time frame and see, okay, if we're getting support from this 2-hour change in state delivery, let's go down to the 15-minute or something and take a look and see if we can get a further confirmation of change in the state of delivery, fair value gap, whatever, coming out of this area on the 15-minute chart, and we'll take a trade from here instead. Right, so refining stuff. But anyway, that wasn't my trade. So let's carry on with the analysis in this video. Back to the daily, because this is super important. Right, so the first thing I notice when I look at this is that once we've come up and created this fair value gap here, which we've done on both charts. This one is eventually obviously an inverse fair value gap, but don't worry about that for now. Let me take that away. So what do you get on these highs? Look, these daily highs. What you get is an SMT. Now you can see here we've made a higher high, and on the S&P we've made an SMT with a lower high. Right? Oh, that was a mouthful, wasn't it? Anyway, what do we see here? Well, what we see is the Nasdaq has had strength enough to push up and make a new high and close above the high. But the S&P has failed to push up even above the high with a wick, and it's failed to close above. So to me, what looks stronger at the moment is the Nasdaq, and what looks weaker is the S&P because of the failure to push higher. Now, look at what we get on the next candle. On both. So here we've succeeded in taking the high, and we get a fairly shallow push back down into the fair value gap, right? On the S&P on the same candle, look how far we get pushed down. So what that's showing to me is that this weakness, this failure to go higher, shows that there's weakness, of course, and then momentum to potentially go down a bit. And what we do is we tap right through this fair value gap here, and then we grab all the liquidity and we get pushed higher. And so when we fail, we've seen a deeper pullback down, okay? Deeper mitigation of this fair value gap. Now we have another SMT on these 2 days, okay? And that fuel from that push down, look, it made a much bigger impact on the S&P because it took all the fuel and got all the liquidity, and then it pushed higher. If we look at the same points on the Nasdaq, we can see that there's an SMT at the highs here as well, and that SMT results in the Nasdaq now failing to make a new high. So if we just use our previous example and we say, all right, if it's going to behave the same way as the blue example, now that the Nasdaq has failed to make a new high, maybe it's going to have a deeper pullback into the fair value gap. And what do we get on the next day after that SMT happens? The Nasdaq pushes right down to the 50%. I think pretty much exactly the 50% of that fair value gap. But what happens on the same candle on the S&P? Well, the S&P was stronger, right, in the sense of it took the high, whereas the Nasdaq failed to take the high. So that one, the Nasdaq got pushed right down, but the S&P didn't get anywhere near, look, even touching the fair value gap. And what actually happened is the S&P closed above all the other previous candles, all the previous days. But the NASDAQ, actually, I think if we just use this SMT, sorry, I think, it wicks it, look, but it doesn't close above, okay? Now, often when things fail to close above something, as we've seen, there's going to be some additional weakness coming in, perhaps. So where I started was I had this daily candle that had formed on a Monday, and I was trading on a Tuesday. And when I joined the chart, basically, I'm going to see part of this candle already formed. And the part that I'd seen formed was that it pushed up and wicked above the previous day's high. And then I expected, because it was around here, it looked fairly similar to this candle actually when I was looking at it, just without the push down. It was a small sort of, it looked more like this one here, a small sort of doji style. But it pushed up and then the body was hanging around in this area. And I thought, okay, it's showing weakness. It's not able to, so far, close above here. I think that after this push and after these failures, as we said, to take, break above this previous high, I think, although the overall trend is bullish from a bigger time frame and a bigger perspective, I don't need any more than what the next day is doing, right? I don't need more than what's going to happen in this day, because I'm only trading during a 1 day period. I don't trade overnight. So I want to know what's going to happen during this day. And what my thinking was that, okay, I think that we're going to get some sort of push a little bit down because of all this failure and because we'd taken external liquidity here, right? And now what do we do then? Well, we're probably going to go back to internal, and what's not been touched? Well, this one hasn't been touched. So maybe we're going to get some sort of pullback down into here. Now, of course, I was on this day, so I couldn't see any of this. But you can see that that's actually what happened. And in the S&P, it's happened even better. Like, it's gone right down into that fair value gap, but then been supported higher. So what do we expect now? Well, price is probably going to be, after this candle, pushed higher. And what do we get? Well, we get that, don't we? We closed here, we opened here, a little wick, and then boom, up we go. So maybe in the next few days, we're going to try and push up to these highs, depending on what the Trumpinator and Elonatron say. But, we'll see. Anyway, so I was trading on this Tuesday, and I was expecting, although we're overall bullish, I was expecting a bearish bias for that day. Let's go down now to the 1 hour chart and take a look. All right, so here we are on the 1 hour chart. Now, this black line is the previous day, the Monday's high. Okay, and this is Tuesday's trading. Now, although it says at the bottom of the screen Monday, what you notice is that we've got the 4 o'clock to the 6 o'clock market sort of pause that we have in futures. And then this, after that is basically, that's the electronic trading hours, right? And then this after that is basically, although it's Monday by New York time, it's actually classed as, it's the Asian session, right? And it's going to be the next day's price action. You're going to get Asia, and then you're going to get London, and then you're going to kind of come back to New York again. So although it says Monday, this is actually Tuesday. And so we can see what happened on the Tuesday session. Immediately, pretty much when things started up, we pushed up and we wicked above the previous day's high. Okay, we failed on the 1 hour chart to close above. We also created an SMT. You can see that small green line there. You can see the small green line on the S&P. You can see this one slopes downwards, that one slopes upwards. So between these two candles, there's an SMT. Now on the 15-minute or 5-minute or whatever, this is going to be obviously a whole range of candles, but on here we can see it through the microstructure, through the wicks. Now after it failed to close above the high and it had an SMT, then we get immediately afterwards this strong push down on the 1 hour chart. We get this fair value gap and we get this bearish order block formed. So there's quite a bit of stuff in here, right, to say that price is likely to be going down, as I suggested in my previous analysis just now on the daily chart, right? So this really cemented my bias for being bearish for the day. But I took 2 bullish trades and a bearish trade. So why did I do that? Well, let's further analyze this 1 hour chart. What I notice is that you can see, again, we've got a divergence within the points of interest, because we have this bearish fair value gap here, which has been touched into these, these 1 hour candles. But here we haven't got anywhere near it. Right, and we have 2 fair value gaps. Look, on this one they overlap. On this one they're separate. This is actually fair value gap from another time frame. Anyway, so there's two fair value gaps, right? A 1 hour and a 15-minute, I believe. And we've come up into the NASDAQ one. We haven't come up into the S&P one. So again, now we have a divergence, right? Because this has failed to get into the fair value gap and the NASDAQ has got into it. So what I thought is that, okay, we've taken liquidity and we've pushed down. I'm going to look for a trade back up into a further deeper mitigation of this fair value gap, potentially. I don't care whether it goes right in or all the way through. I was just planning to trade it back to really around the edge of the fair value gap. So what I did was I saw these inverse fair value gaps on the 1 hour chart from the left side, and I watched price come down into them. And this is where I dropped down, in fact, to the 1 minute chart and took a couple of trades. So let me show you those now. Okay, let's just get our bearings here. So here we have the black line is the previous day's high. You can see we've come above it, and we have the SMT there. Obviously, it's not lined up properly with the candles because it lines up in a different way when you draw it on a different chart. And I don't need to fix that, but you can see there's an SMT on the 1 minute chart, of course. There's going to be, right? Because those two 1 hour wicks that we saw before are then obviously a ranger price on the smaller time frame. So once it had come up and broken that, then you get the 1 hour fair value gap here, okay, and the change in the state of delivery. You can see that that's still marked on this 1 minute chart. And here's the IFVGs that I was interested in taking a trade back out of into the fair value gap. Now, because this one had pushed up and this one was failing, I wasn't sure that this one was going to push high enough for my liking. So I took these two trades on the 1 minute chart of the NASDAQ. Now, if we just quickly go to the 15 minute, what I want to point out is that here is the IFVGs where I was looking for a trade. What do we have here in this bit of price action? We basically have their trend line liquidity, right? There's all these highs being built up, okay? And that is likely to get swept. You'll see that on the 15 minute chart. Let's look at it on the 1 minute chart. On the 1 minute chart, look at how the sort of structure is formed from this rejection out of the fair value gap. We've got all of these bearish fair value gaps, right? It's just basically constant bearish fair value gaps, pretty much. There's a bit of overlap. And then there's obviously these small change in state of deliveries in here, in the internal structure there. So we're purely bearish here, but look at all the liquidity that's being built up in these fair value gaps and above these sort of, trend line liquidity, really. I mean, look at the line you could draw down that. So again, I'm thinking, okay, if I'm going to trade out these 1 hour fair value gaps or IFVGs, I'm going to look for this liquidity to be taken. So my first trade, which ended in a loss, was here. So this box here you can see is my trade. There we go, a 3 to 1. What I did was I saw that price was coming down and it was making obviously the bearish change in state deliveries. But then what we got is, and you can see it's underneath the thing, but you can see the little green box there. Here on this candle we broke above, right? You can see this candle here got broken above here. So I thought, okay, this might be my trade, right? And I also had an SMT on these lows. Let me just zoom into the S&P as well so you can see this and compare it. That's important. All right. So here you can see the same price action, and we have these SMTs on these lows. Okay. So I thought, okay, once price has closed above this with a body, and we've got the SMT, and we're in this 1 minute fair value gap, and we've basically taken out these 1 hour IFVGs, this could be the turnaround point, right? So I put my entry on this candle, and we broke above, we tapped back in, and then basically pretty much immediately it fell down here to a loss. Okay, no problem. I mean, we take losses, right? That's part of this game. So what I then considered is I still think I'm right. And what I often do is I normally allow myself 3 potential trades per day, and I generally target 3 to 1. So what that means is if I get 1 winning trade and 2 losers, then I'm still 1 R up. So obviously I've taken 1 trade, I can allow myself more. Now if I take 2 in a row, 2 losses in a row, I'll probably quit. Right? That's my rules. But I obviously had taken 1 loss, so I could take another trade. And I just felt that I'm right on this idea. So what happened again is then I saw, okay, we've come down again we've made another SMT, you know, more SMTs here now. And then what we did is we broke above, much more strongly this time, this bearish candle here, causing a change in the state of delivery, right, on the 1 minute. Now here, you know, we were purely bearish. Now we're getting this mixed thing, right, this range. And as you can see, we were in a range. Now, when this broke above here, and I saw price coming back down, I thought, yeah, I'm going to go for an entry here. So I put my entry there, and I got tagged in on this candle here. And then we started to push higher. But then we started to come back down again. And then I did start to get slightly worried when we got so far down, because what you can see here, let me just zoom the S&P as well. On these lows, it's really hard to see actually, but it is actually an SMT, because although this looks like a higher high, it's actually equal lows here. Whereas this is slightly angled up. So there is a small SMT there, nothing great, nothing very significant or strong, but I did see there was an SMT. So I thought, okay, when we got here, and then we start, look, changing state of delivery, right, going higher, another one here. I started to think, okay, maybe I've survived, because I was literally, my stop loss was, you know, the blue box, right? So it was on the low here. Now, I could have put it a couple of ticks below, of course, and that would have been safer. But I just avoided getting stopped out on this second trade. And I didn't think it was going to come so far back down. So I got worried, but, you know, I stick to my plan. I put my trade in. Some people say, oh, you know, cut your losses early. Okay, if I'd done that, I would have lost this trade. So I'd have been 2R down now. What actually happened is, of course, boom, I got a winning trade out of it. So I don't, you know, once I've executed a trade, I generally just leave it home. I think there's less psychological pressure on you that way. There's less second guessing yourself. And, you know, once you start thinking that this is going to fail and then you close it and then it didn't fail, then when you come to the same situation next time, what do? You know, I just have one rule. I've put a trade in, had my idea, I think it's good, and I'm sticking with it. So all these things down here, you know, the change in state deliveries are looking good. But then what do we notice here? This red box, it's a flip zone. Okay, because what's happened is let me just zoom a little bit. We've gone up to go down, up to go down. Okay, so the last zone that pushed up in order to go down was this red box here, right? This low to this high. That's the last push up before it's going to move down. Now, what you'd expect is if we were in a downtrend here, right, and we get a little pullback, an expansion, and a pullback, and an expansion, we'd expect that this should really be responsible for pushing lower, right, below these lows. But look, we're failing to make a new low as well, right? So market structure comes in as well. Now, what do we know? When we get a last zone that we come out of, but then we come back up, look here, and let me just move the actual trade box for now, just to get out of the way. You can see. We come up, we come down, we tap back into this zone, we test it, right, and we get rejected out. See that? Now, if this now zone, this down to go up, because we're going up to go down, and now we're going down to go up. From here to there, we've gone down to go up. So once we get a break above this zone here, we've got a flip zone, right? This grey box, it's very light, so I hope you can see that. This grey box is then our flip zone, okay? So what do we expect with a flip zone? We expect that once it's succeeded in breaking through this previous zone, that's when it's confirmed as a flip zone. And then we expect a revisit of it and then a continuation higher. And what do we get? Exactly that. But not only that, do we get the revisit of the grey box, as you can see, the flip zone. We've also got a 1 hour IFVG in here, right? So now you've got a 1 hour IFVG with a flip zone inside it, or the IFVG inside the flip zone, whatever. So those two things are giving us another strong indication, and the change in the state deliveries here are giving us a pretty good indication that price is looking to go higher. So I was pretty confident, you know, once I saw it start to turn around and make these change in state deliveries, I thought, oh, okay, good. And then I saw the flip zone, and then I saw the 1 hour IFVG, and I thought, okay, I think I'm good here. And of course, once we hit this flip zone at the same time as we enter this 1 hour IFVG, look what happens. Literally, boom, straight up. And there was my trade. And that was where I first got tagged in, or I believe. Yep, here was where I got tagged in. We got that push down, which scared me a little bit. And then all these flip zones and everything, and we pushed higher. Why did I take the trade only 3-1 instead of going into the the fair value gap above, the 1 hour fair value gap? Because I don't want to be greedy. I don't know if we're going to reach it. We've already been in it. I don't know how far we're going in again. So I would at most want to take the edge of the zone, but just for safety, because that matched up with my 3-1, which I normally take, I just left it there. I don't need to worry whether I get these, extra, well, it might have been almost a 4-1. But I could have just equally taken a 1 hour loss, right? Because it didn't quite reach maybe there, and it went straight back down to my stop loss. So that was my 2 trades there, okay? And now we've got one more. So I was pretty much thinking I might be done for the day here. You know, I'm 1 hour down and 3 hour up, so that's 2 hour for the day. It's not bad, you know. Don't need to do any more than that. But then I went to the 15-minute chart and I saw something interesting. Let's go and take a look. Now, trade number 3, and this is also an interesting one from a practical perspective, because just forgetting all the technicals for a minute, as a trader, we all have a battle with psychology and our real life commitments, right? Our lifestyle. And in this trade, you're going to see what I think are some great examples of these things that you'll probably be able to relate to. Let's take a look at this 15-minute chart. So at this point, I was considering closing the charts for the day, as I said, although in my risk parameters, I had the potential to take another trade because I hadn't taken 2 losses in a row. I could have still taken another loss now and still be 1 hour up. So I decided that, well, maybe, you know, I'll just keep an eye on things and see what happens. And remember, I'd just taken 2 bullish trades, but overall, I'm bearish. And I haven't taken a bearish trade yet. So I've just gone against my bias twice. But, you know, understanding sort of the market structure and stuff, it's not a problem to go against the bias. But, you know, if my feeling is that we're going lower, then, you know, why wouldn't I be looking for a bearish trade as well? Now, the reason I got out of the 1 minute chart is because you don't want to spend all your time on the smaller time frames, right? You need to get out of those 1 minute charts pretty much, for me, as soon as you can, because otherwise you risk getting wrapped up in all the noise and all the stuff, and, you know, you start seeing some trend forming or something, and it's, you know, it's not even close to being a trend on any other higher time frame, any larger time frame. Okay, so don't spend too much time on, say, the 1 minute chart. So on the 15-minute chart, I basically saw that we were ranging to the side, right? We're ranging sideways, and it's the same on the S&P. But what I saw was, when we had this, you know, when I got my successful trade here, after that we got this SMT, okay, within the 1 hour fair value gap. And we also, you can see there, the SMT is in the same place, and it's an up slope there and a down slope there. It's not, again, it's not a, you know, the angle is not very pronounced, but that doesn't matter. It's still an SMT. What happened is S&P succeeded in sweeping its own high, and NQ failed to sweep its high. So then I started to get interested in the S&P. Now, I haven't touched the S&P today. I've just used it, you know, for SMT and everything. But I started to see, you know, this forming here. I thought, okay, there's something to this. So this might be now, when we swept liquidity, where I might look for taking my bearish position. Now, what I also saw is, if you see this bit of price action that formed the SMT here, we have one bearish candle in there, and then we have a series of up close candles, right? Bullish candles. Now, the same bit of price action on the SMT shows that, look, we come up with these 2 candles, and then we've got a down close candle. So now we're resetting our series of candles, right, to just these 3. Whereas here we've got, what is it, six bullish candles. Here we've got a series of 3. That also attracted me, because rather than trying to take the mean threshold of all of this on the on NQ that hadn't swept its high, I prefer to take the one that swept its high, in this case, and then made a much smaller change in the state of delivery, or potential change in the state of delivery. So you can see I'd put my trade on the bottom of this series of up close candles. I was waiting for price to come down, and then obviously tap back in and go. Then what we see is that the price comes down after the SMT, and we also get an inversion, 15-minute inverted fair value gap, right? So this bullish fair value gap here, zoom in a bit, this one here gets closed below as well. So we've got now the change in state of delivery that happened here. We've got the IFVG that hasn't been touched, obviously, yet. And I thought this looks like a potentially decent place to take a trade. Now, where was the price going to be going down to? Well, we have below, right, we've got the fair value gap, right? The one that was, I believe, that was the untouched one, was it? Or no, that wasn't, maybe. No, that was the one that had been touched before. Well, I felt like that is going to be a place where we might go back down to, right, and take some liquidity. So I had plenty of draws. I had these also 15-minute IFVGs that were down there that hadn't been touched yet, all sorts of stuff. So what I did was, and let me just, I think I can minimize NQ a little bit now because we don't really need it. So what do we have here? Look, we've got this like move here. We've got this down move, this zone, right? This down to go up. Okay. And what's happened is the price has come down. We've gone up above the zone. And then what happens? Look, we come back down and we try to push lower, but we don't get lower yet because we're only wicking. But then over here, you can see that we actually break below this low. So what I'd done is I'd actually entered when we got the break of the change in state of delivery here. And then we got the pullback, which obviously tagged me in. And then I saw price push down. I thought, oh, good. Okay, this is what I'm sort of expecting. And price is going to continue down. So I was kind of hoping that around this area, I was going to get out. But then you can see what happened is price pushed back up. Now, again, I started to think, oh, come on. You know, this is now the 15-minute chart. So these candles, you know, this is some hours of obviously price action. Yeah, so we got the zone. We closed below it here. Okay. And then you can see here we tap back into it, right? And that gives us we're looking at the last zone that caused the break through this one, right? We've got down to go up. Now we're looking for the last up move here. Okay, see that? Last up move that breaks the structure. Okay, that's here. That was my last zone going up. So this becomes my potential flip zone. And once we've closed below this other zone, then it becomes my flip zone. And then what am I expecting? Price to go back up into it and then be pushed down. Now, we also have a 15-minute SMT, here, and the 15-minute IFVG. So a lot of stuff telling us that price is going down. But here's the problem. My prop firm account requires you to close the position before a certain time of day. That time of day is basically approaching this area here. Now, I hadn't expected this trade to take so long because it was a number of hours. And I saw all this stuff happening here, thought price is going to push. So I gave it some more time. I got the SMT, I got the tap back in, and we got the push. But then again, we started to range. Now, we were getting close to the time where I needed to close the position, but because if I didn't, Top Step were going to close it for me. And then you never know what kind of price you're going to get. And you also don't know, are you going to be in the profit still, or are you going to be at a loss? Because you can see how this price came back into loss, went into profit, back into loss, back into profit, back into loss, back into profit. It just kept doing it. Look, here, there, everywhere. So I was getting kind of tired of this trade. And the other thing was that it was coming up to, I think it was around 7 in the evening or something, my time. You know, I had the kids at home. I had my son to drive to football. I had dinner to make, all these other things, commitments, you know, real life commitments. And so when I saw the trade go into the loss for the last time and it was getting towards my time, I gave it, you know, a couple more minutes. And then when I saw this doji here, this sort of dragonfly doji or whatever you want to call it, this indecision candle, I was like, oh, God, am I going to wait any longer and risk price going back up and me being in the loss when Top Step closed my trade, which I never let them do. I never let them close the trade because it's normally an unfavourable price and I just don't want to even go there. Or do I now take whatever profits I've got and just say, okay, you know, this trade took too long. I can't trade overnight on my Top Step account. So I'm just going to leave it, you know, close it down, take the profit I've got and be done. And then I can go about my life. I don't want to be in a trade when, you know, I'm dealing with my kids and stuff. So I decided that I'm going to close this. And I believe I closed right on this candle somewhere. I think it was 0.6R or something. And let's see. Yeah, it was somewhere pretty much exactly there that I closed the trade. And I was happy with that because, you know, I've got a -1, a +2, and then a +0.6. So basically ended up, it was a -1, +3, and a +0.6. So I ended up in total for the day 2.6R in the profit. Now, yes, of course, I could have got another 3R out of this if I'd waited another, half an hour or something, but I didn't know that. I didn't know if it was going to be in profit. I didn't know if it was going to go back into the loss and then Top Step start trying to close out my trade and stuff. Didn't want to go there. So psychologically and from a lifestyle perspective, you just got to say sometimes, you know what, I don't want to take the unnecessary risk. This has taken longer than I expected. And yes, if it was overnight trade and if I could hold overnight stuff, I would have just left it. Because I couldn't, and I might get forced out of the loss, I decided just get rid of it, be done with it for the day. Your 2.6 are up, all good. Go and deal with your kids and your family, and don't have the division of attention between the chart and your kids. And so that's what I did. And you can't be upset about those kind of things. I mean, I missed out on 3R. Yeah, but I got 2.6 for the day anyway. I mean, do I need, what would it be, 5.6? I mean, be nice, right? But this day, that didn't happen. The market didn't give me exactly what I wanted, and I do what the market tells me. So, I don't want to take unnecessary risk. So while I don't close my trades only, I don't normally mess with my trades. This one took so long, and, I even considered not bothering with it anyway because, I knew that part of the session we were in. But, I thought, I've got a lot of hours here. It should be fine. Unfortunately, it was in the end. And look where it went to. I mean, I had this for 3R, right? So let's just have a look. 3R. Look where it went to. Right, into exactly where I said it was going to go, into these IFVGs, pretty much to the tick, and then whatever happens after that, I don't care because, the trade is done. But, can't be mad about that. And I know that you guys obviously face the same type of struggles, and, none of us are perfect, and I'm happy with that trade. I'm happy I didn't spend any longer in it, and I'm happy, sounds weird, I'm happy I didn't get 3R because I need to stick to, what my analysis and what my risk parameters and stuff are telling me. And that way I avoid, hopefully, being at a loss. So I think this is a key lesson, that this whole trading journey is ultimately, for me, about flexibility and freedom. The money is a secondary benefit, of course, but you can't let this thing rule your life. Make it fit around you and be happy if you walk away with a green day. Well, that's my advice anyway. But I wanted to show you this because it shows some of the realities that we all face as traders. And I thought it might resonate with many of you, and also show you that we are all basically facing the same struggles, right? And we're all in the same journey together. So I hope you guys have found this video useful and that you're able to take some value away from it by seeing real trades, but also seeing most of the concepts we've covered so far. I probably missed some stuff as I do these videos largely unscripted, and it's hard to remember everything when you have to just talk constantly and think about what you're saying, and there's really little room for pauses. But also, I hope you found the human side of things inspiring also, and know that I face exactly the same struggles as you do in this. Anyway, if you like this content and want to see more, while also helping get this out to other people that it might help, like, subscribe, and also leave me a comment with your thoughts, ideas, or what you're struggling with in your journey. Would you have done the same thing as me in this situation? Let me know in the comments, and I hope to see you in the next one. Take care, and thanks for watching.